Hello friends, welcome back. In less than 10 years, GM will go bankrupt and lots of union workers are going to lose their jobs. If you follow me on my Twitter trades, I closed my GM short position for a profit. And to be clear, I would have held the short all the way to zero if I could. But shorting a stock, brokers deem it risky. They will shrink my margins. So I had to close my short position to buy more Tesla stock. As I put more time into studying GM, I just can't believe the magic fuckery GM does on their numbers. You see, imagine losing money for every car they sell, but they show a profit in earnings per share. I mean, what? In running any business, there's only one number that is important. I've said this multiple times, free cash flow. If you had to pick just one number to determine the health of the business, it's free cash flow. It's simple. How much cash is left after paying expenses? It's the same as your bank account, like how much money is left after spending. If it's positive free cash flow. Tesla has 2.5 billion free cash flow, which means every year Tesla adds 2.5 billion to their cash balance. Tesla's free cash flow turned positive in 2019 and the stock price started to moon. Free cash flow is that important. So let's take a look at General Motors free cash flow. From 2014 onwards, the company has been losing money. 1.8 billion, 11 billion in a year, and it's been losing money for every car they sell till today. So how does GM perform this magic fuckery to achieve positive earnings? There are two ways to fund a company: profits from selling a product or raise money from investors. So General Motors raised money issuing unsecured notes to investors. I've been trying to find out which donkey buys them, but I can't find it. If you do, let me know. 20 years ago, GM was selling 5 million cars a year. 20 years later, it's half that. And 2021 numbers are worse, 2.2 million. There is this break-even amount of cars needs to be sold. Else, how do you maintain paying your workers and maintain operational efficiency? As the amount of cars sold drops, the losses magnifies. It's like when you hire 10 workers to make 1,000 bread. If you sell 500 bread, you will still need to pay your 10 workers and pay for machines to run your rental. Sure, you can fire some workers, but it doesn't cut your cost by half. There's machine, there's rental, basically OPEX. So this is where it gets really shitty for General Motors. As EV gains adoption, General Motors sales will plunge. Signs of death is already showing. Q4, quarter over quarter, a minus 42.9% drop in sales. You think about it, minus 42.9%. Even the worst of the bears wouldn't predict such numbers. And adding to the cash burn, GM needs to heavily reinvest to transit making EVs. 35 billion from investors, issuing unsecured notes. Hey, good luck. And according to GM's plan, which I think is total BS, batteries are the bottleneck for EVs, and their battery plans don't stack up with their projections. GM said by 2025, 15% of GM vehicles sold are EVs, and assuming by any chance the sales remains at 2 million a year by 2025, and that's only like 300,000 EVs. But by 2025, Tesla will be selling 5 million EVs per year. Wrapping up, how will all this magic fuckery ends? Number one, GM goes bankrupt, or two, because GM is an American brand, the government will bail them out. Either way, shithole. Hope you learned something. As always, invest safe.